Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a company that one of my viewers requested for me to take a look at. So if there's any companies that you'd like me to take a look at, leave it in the comment section and I'll definitely go and check it out for you guys. As always, please remember that this is not financial advice. This is just me sharing. Some of the highlights that I found about this company is that it has been giving dividends the past 54 years. I looked at a lot of sources and analysis ratings of strong buy or buy, and it simply Wall Street also said that it is 79% undervalued. So hope you like this video. Do me a favor, give it a thumbs up. If you're new to the channel, hopefully you like this. By the end of this video you like it and you subscribe. Without any more delays, let's take a look at this company. So the company is ABM Industries. The ticker symbol is ABM. This is a company that provides integrated facility solutions in the US and international. So what they do is they provide janitorial, parking, custodial, landscaping, and ground, and so on. So definitely, if you want to take a look a little bit more about them, go to their website. But we're going to quickly look at some of the PowerPoint presentations, specifically the Q3 2022 profitability. So you can see the net income and loss. You can see the earnings, loss per share, and then the other one's adjusted EBITDA. Now, if you look at the performance, you can see the revenue right here. You can see from 2021, it's from 2023. You can see the business and industry as well as the aviation. You can see the revenue has gotten better, operation, profit, and margin. And then you can see a little bit more of the performance by manufacturing, distribution, the education, technical solutions. You can see that in a comparison from the year before. Now if we go to Simply Safe Dividend, based on their dividend safety score, they're rated as safe, which is 61. Dividend yield is 1.88, and then the beta is about average. Market cap is mid cap. And if you look down to the key metrics, you can see payout ratio is 21, forward payout ratio is 22. During the recession, they've increased their dividend. And then here it is, 54 years of dividend streak without a reduction. Now, if you look at the dividend growth, the last 4 years, the last 20 years, 4%, which is slow. Last 5 years, 3%, which is slow. And then the latest is 2.6, which is very slow. I do like the upward trend, and I definitely like the 54 years without a reduction and 54 years consecutive increases. If you look at the payment details, you get paid quarterly in the months of February, May, August, and November, and your annual payout is 78 per share, which breaks down to about 19 per month. And then if you look at the what Simply Safe Dividend thinks, it's a reasonably valued one. Now if you look at the price range, it's a little bit closer to the 52-week low of 37. And then if you look a little bit more, you can see some more stats. Total sales, outstanding sales, return on investment capital, return on equity. You can see here 13% in the last 12 months. Return on investment capital 11% in the last 12 months. Now if we swing to CNN Business, based on their stock price forecast, they rated as a high of 65, medium 58, and a low of 51. And then their analysis rated as a buy. Now if we go to tip ranks, based on their analysis, they may rated as moderate buy. You got 2 buys, 1 hold. Price target all the way up to 52. At the time of this video, it's about 41. They see about a 25% upside, the high of 52, and then low, and then the average of 52. Now if we go to a little bit more the analysis, you can see smart score of 8, which is outperformed, and then you got your strong consensus of strong buy. And then if we swing to seeking alpha, what I wanted to also do is see the 10-year performance. As you can see, based on the 10-year performance, it was up about 120. Now if we swing to Webull, based on their analysis, they rated as a buy. There were 7 of them. Strong buy of 42, a buy of 42, and then a hold of 14, with the price target as a high of 65, average of 58, and then the low of 51. Now if we go over to NASDAQ, based on their analysis, there were 8 of them. They rated as strong buy. And then there's these are the companies like Zach Research, you got Blair, KeyBank Cap, and then their price target is in the high of 65, 58 is the average, and the low of 52. Now if we go to bar chart, based on their price target, you can see a high of 65, 56 is the medium, and the low target of 51, with analysis rating of strong buy. So as you can see, strong buy the past 3 months, 6 analysis rated as a strong buy. If we break it down to 1 moderate buy, 4 strong buy, and 1 hold. Now if we go to Stock Rover, based on their analysis, they rated also as a buy, 6 of them, 4 strong buy, 1 hold. Now if we go over to the risk and return, based on comparing it with the S&P 500 and the industry, you can see kind of lags in a 5-year return, 7%, whereas the S&P is 57, and then the 3-year return, it was better, it's a little bit better, but still underperforms based on S&P 500. Now if we go over to simply Wall Street, based on their share price and fair value, you can see the fair value is 198. At the time of this video is at 41. Calculations about 79% undervalued. Now if we go over to their overview, you can see the positives and the negatives. Dividend of 1 penny is not well covered. Dividend is not well covered by cash flow. You can see all these things. Now if we go to stock card, one of the things that you can see from stock card is a 24% upside. Yeah. And then if you look at the growth potential, as you can see, here is the financial strengths. Growth specials right here is neutral. Financial strength as well, struggles with growth revenue. Here's your revenue for the fiscal year and the last quarter, as well as peer comparison versus peers. Positive but slow quarterly revenue, and then the annual revenue growth as well. The peers is 6%, and then ABM is 4%, and then the 3-year revenue growth is right there. Yeah, and then you can see profitability. So there's a little bit more information in there. Based on their strategy, buy and hold is about 50%. All right. That's about it, man. Thank you so much for watching. My take on this is that it's a pretty solid company. 54 years without increasing is a pretty good accomplishment, as you can see. You know, so this is what I like about it. 54 years without reduction, 54 years increases. The only thing I don't really like about it is the growth. Last 20 years 4%, last 5 years 3%. So I wish it was a little bit more, but I think this is one of those really boring companies that just chug along and just gives those dividends. But you know, is it for me? You know, it's a pretty undervalued stock right now. I might have to think about it a little bit more. Like I said, I do like the 54 years without a reduction, but I just don't know if I'm liking the 20 years of only 4% dividend growth. So that's it, man. Thank you so much for watching. Hope you liked this video. Please do me a favor, share if you find this information great, and also check out some of the videos as well, right? Thank you so much for watching, guys. Please be safe out there. Stay cool, keep investing, and I'll catch you guys in the next video, all right? Take care. Aloha.